So let's kick it off now. Joining us, our friend Helima Croft, Global Head of Commodity Strategy at RBC Capital Markets, and Bob McNally, founder and president of Rapidan Energy Group. Helima, let's kick it off with you because you and Bob both have been an invaluable source for me and our network on this. Do you have any predictions or expectations for 2023?
I mean, Brian, the big story for 2023 for oil is going to be the China reopening. I mean, this would be the significant tailwind for oil. It's actually amazing the oil held up as well as it did, given how bad Chinese demand was this year. So if we do have this China reopening continue, even in the face of a health crisis in that country, that I would say is the biggest catalyst for oil going into 2023.
You know, Bob, if somebody were to ask me, hey, can you make the case for $50 oil or $150 oil? I think I might just answer, yes, I can.
Absolutely, Brian. You know, for the first time in my 32 years of counting barrels, I've never seen so much short-term uncertainty. I mean, normally when the oil market's dealing with a big exogenous shock, it's one thing, like a recession or a war in the Persian Gulf or Iran attacking Saudi Arabia. Now you got two things hitting us. A very bullish one, this Russian disruption, which looms, is getting started. And on the bearish side, as Helima said, it's the China reopening, it's central bank tightening, it's macro headwinds. You can make a very good case for $50 a barrel in March. You can make a very good case for $150 a barrel in March. I've not seen anything like it in my time in the oil markets.
And again, to your point, Helima, somebody says, is China's reopening bullish or bearish for oil? And I will answer again, yes, because you can make the case either way, can you not? Because as cases go wild, people may self-lockdown.
I mean, that is the key question. I mean, do you have a major public health crisis in China that essentially is, bearish for oil? But I think, when we're looking at this, we would still come out and basically say, if this reopening continues, if the Chinese government is prepared to push forward, even with rising COVID case counts, we think potentially, though, the floor is in for oil. We've seen the lows. And we do have this other story, as Bob pointed out. What happens with Russia? I mean, Vladimir Putin was out today essentially saying that he's going to cut off anybody that abides by the price cap. Now, it's kind of ambiguous. What does that exactly mean? Because he also gives himself the kind of exemptive authority. So is he really going to cut off a refinery like Reliance in India that pays at $60 or below? We have to wait and see. But certainly with natural gas, the Russians did make good on their threats to cut off consumers.
Yeah, but as Helima, I'm going to quote Helima Croft to Bob McNally. As Helima has noted, natural gas is small for Russia. I mean, it's big overall, but compared to oil, it's fractional. We'll talk to Dan Yergin in the next block about a little more about Russia and oil, Bob. But do you think, and would you agree with Helima, that the lows in the price of oil are likely in? We made the bearish case, but the bullish case seems a little stronger.
I think so. And here's why. I don't want to call it a put yet, a Saudi put or an SPR put, but let's talk about Saudi Arabia and OPEC. For the first time since 2014, I think Saudi Arabia is ready, willing, and able to act preemptively and almost alone with a few producers. Why? Two of its big problems since 2014 are solved. Shale was growing too fast, not a problem anymore. Russia was unwilling to cut under shale, not a problem anymore. If we have a recession or a downturn, I think Saudi Arabia is willing to put in a floor. Then you have the DOE. The team Biden is saying, look, producers, go ahead and produce more because DOE will be refilling at 70. I'd like to see that before I believe it in any meaningful size. But nevertheless, those are two new elements which, to Halima's point, suggest not only the lows are in, but Saudi Arabia, OPEC Plus, and to some degree the SPR have your back and have a floor.
Helima?
No, absolutely. And I think Prince Abdulaziz has really shown that when he comes out and makes statements about willing to be proactive, take him seriously. So if we do get another recession fear coming into the market, I think OPEC can meet very, very quickly to put in a floor. So I will be paying very close attention, as will Bob and you, obviously, Brian, to the statements made by Prince Abdulaziz. He does back words with action. We've seen that consistently throughout this year.
The next formal meeting, though, Helima, is not until June. So it's this, they were doing that sort of Federal Reserve monthly thing, virtual. They were in person. Then they weren't, by the way, even though I think we both flew over there. Do you see, is OPEC likely to maybe, if oil goes back to 70, jump in out of the blue in February or March with a cut?
I think OPEC will act very quickly if they believe that there's going to be another major macro sellout. They do not want to see this market get away from them. And I don't think they're going to wait till June if they believe that the fundamentals require really quick course correction. So I think June is when we're scheduled to meet. But again, if we have another downturn, OPEC can quickly get the band back together.
Very, very quick final comment from you, Bob, because you mentioned Russia. We were there covering the sanctions. It wasn't like you flip a light switch and things happen. How long will the Russia sanction/price cap impact take to play out? I know you don't know for sure because it's never been done. What's a best estimate?
We probably have to start thinking about the end of the first quarter of 2023, early second. Why? The real kicker is going to be the product ban on February 5th. And there's a grace period, so really they have until April 1. But Russia's going to have real trouble redistributing that diesel and those products it now sends to Europe, about 1 million barrels a day total. That's going to be a lot tougher. We're seeing the crude go off to over 20% drop in December, according to Vortex data from November. But boy, the real kicker is going to be the product. So I think, Brian, we'll see the whites of the eyes of the Russian disruption. It'll be well into the first quarter of 2023.
You do worry that is Europe, whatever you want with Europe and Ukraine, are they kicking themselves in the teeth with diesel when they've already got a diesel issue? We'll find out. Helima and Bob, thank you both very much.